everyone. Today we are going to study about investment avenues in Sapm. So, start with, let us know what is an investment avenues and what it includes. The first one is, these are the different ways that an individual can invest the money. The financial securities, which includes the equity shares, is one of the type of investment avenues, and it also has the mutual funds, non-securitized financial securities, and real assets as their investment avenues. Here we can see the shares, debentures, bonds, public deposits, bank deposits, post-office savings, and public provident funds, money market instruments, mutual funds, and life insurance schemes, real estate, gold, silver, derivative instruments, and commodity market. So let us understand these things one by one. So the first one is shares. Shares generally mean a share in the share capital of a company. In our company, the business organization, these shares are issued by the company's top level management members to create the equity shares and preference shares for giving the rights of ownership and the right of their percentage in the profit which the company will make. These shares are registered as per the Companies Act of 1956. It is known as a share in the company's share capital, and it is also known as the first public issue, that is initial public offerings. The next one is debentures and bonds. A debenture is generally a document that is issued by a company as an evidence of debt. That means it is not an investment, it is a debt which the company will repay in future, but till that time the company will have to pay a certain percentage of interest every year to the debenture holders. Unlike the shareholders who will get the profit if the company has made profit, and if there is a loss, the shareholders have to bear the loss, but the debenture holders will get their certain percentage of amount every year, and at the end when they want to end that debentures or that debt, they will get their funds payback. It is a certificate which is issued by a company under its seal acknowledging a debt due by its own holders, that is stakeholders. The term debenture, it includes the debenture stocks and bonds and any other securities that is issued by the company. It acts as the company can raise loans from the public by issuing of debentures, and the debenture holders becomes the creditors for the company. The next one is public deposits. A public deposit is generally mean in order to meet the temporary financial needs of company, the owners or the stakeholders accept the deposits from the investor. Those are the public. Such deposits are called as public deposit or the company's fixed deposit, and it is popularly among the middle class investors. Almost all companies collect crores of rupees through such deposits. Companies were offering attractive interest rates previously. However, now the interest rates are reduced. But in bank deposits, investment of surplus money in bank deposit is quite popular among the investors. So they will collect the deposit or the loan from the banks for a certain period of time. In a return, they will pay the interest for those banks, and also they will repay their deposit or the fund which has collected from the bank after earning the profit. It generally has a current account, saving bank account, fixed deposit account, and recurring deposit accounts. So these deposits can be accepted from the individuals, institutions, and even the businesses or enterprises. The business and the profitability of a bank depends on the deposit of collection. So the next one is post office savings. Post offices operates a financial institution as well. It collects a small saving of the public through the saving bank accounts facility. But in addition, the time deposits and government loans are always collected through the post offices. So in certain government securities such as Kisan Vikas Patras, National Saving Certificates, etc., they are sold through these post offices. Some new schemes will be introduced, and in order to apply for those schemes, the people will try to deposit a small amount which will become a big amount for the post offices. That same amount they will invest in the business, and when the business gets a profit, these post office accounts holder, they will also get the same amount of profit, like the percentage of profit. So now the comes Public Provident Fund, that is PPF. It is one attractive tax sheltered investment scheme for mostly the middle class and salaried persons. It is even useful to businessmen and higher income earning people. The PPF scheme is very popular among the marginal income taxpayers. The scheme was introduced in the year 1969. The next one comes Money Market Instruments. It is a center in which financial institutions join together for the purpose of dealing in financial or monetary assets. It is a very short-term maturity, which means it can easily get liquidated in the market. It is the short term, that means a period up to 1 year or even less than a year. So the term near substitute to money denotes any financial asset which may be quickly converted into money with a minimum transaction of cost. Next comes mutual funds. Mutual fund is a financial intermediary which collects the saving of the people for a secured and profitable investment. The main function of this mutual fund is to mobilize the saving of general public and invest them in their stock market securities. But the entire income of the mutual fund is distributed among the investors in proportion of their investment expenses of managing the funds and charges to the fund. Like mutual fund in India is registered as trust under the Indian Trust Act. The trustees are appointed, they look after the management of the trust, and they are the one who will decide the investment policy and give the benefit of professional investment through the mutual funds. Next one is life insurance policies. It is nothing more important to a person than the feeling that their family is financially secure at all. Life insurance is a contract whereby the insurer, in consideration of a premium paid either in a lump sum or in a periodical installments, undertaken to pay an annuity or certain sum of money either on the death of the insured or the expiry of a certain number of years, whichever is earlier. Investment in real estates. Investment in real estates includes properties like buildings, industrial lands, plantation, farmhouses, agricultural lands near the cities, or the flats and even the houses which are located in the cities. These type of properties attract the attention of an affluent investors. So it is an attractive as well as profitable investment avenue today. A residential building represents the most attractive real estate property of a majority of investors. By this, the price of real estates are increasing day by day. The next one is investment in gold and silver. Not from today, but from a very, very old era, people have been investing in gold and silver. As their values get multiplied year by year, they get their profit up to the double rate of their investment within a span of times. The gold and silver value changes repeatedly, and to the shop, everybody likes gold, hence requires gold or silver. These two precious metals are used for making ornaments and also for investment of surplus funds over a long period of time. In India, gold is an obsession deep rooted in mythology, religious rites, and it is very psychological. In every family, at least a little quantity of gold and silver is available. But some people buy this metal as an investment as well, as their values grows simultaneously over the period of time. The next one is Derivative instruments. A derivative instrument is a product whose value is derived from the value of an underlying asset, index, reference rate, and the underlying assets can be a equity, commodity, or any other asset. For example, if the settlement price is derivative, it is based on the stock price of a stock. The next is a commodity may be defined as a product or a material or any physical substances, morely like a food grain, processed products, agro-based products, metal or currencies, which investors can trade in the commodity market. One of the characteristics of this commodity market is that its price is determined as a function of its market as a whole. Thank you.